Morning, guys. It's the 12th of August. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Morning, Joe.
How you doing?
All right, not too bad, thank you.
Good. Good. Okay, so stocks are being called a bit higher today, or are a bit higher. We've had a glut of UK data out this morning, which we'll come on to shortly. In terms of what's going on the stock side of things, we've seen the leading coronavirus vaccine makers been tumbling from their record high valuations over the last couple of days. So that includes Moderna, Pfizer, having lost more than 60 billion in combined market value, which is pretty significant. But some analysts have been calling it ridiculous valuations anyway. So maybe just a bit of a correction back to some what could be normal levels. In terms of what happened yesterday with the big US inflation figures, that will help guide obviously the Federal Reserve's policy as to what the economists expect. And consumer prices rose 0.5% in July compared to a month before, a moderate but persistent increase, it's been called. And a study earlier this week showed the medium-term inflation expectations at an 8-year high. So we'll be waiting to see what the Fed do and whether or not there will be any action taken. So European stocks are high this morning, following on from what we saw in the US yesterday. There was a bit of a pullback in Asia. China's regulatory reach has grown a bit longer, which is having a small impact. So I think, Steve, that's pretty much it. Just in terms of the UK data that was out this morning, we had a bit of a mixed picture. We had strong GDP figures, but that was counteracted by disappointing trade balance, industrial production, and construction output. And also manufacturing production data. So a few more data bits out today, which we'll come on to at the end. But that leads us in nicely to the charts, Steve. So where would you like to start today?
I'll start with indices. We'll start with the FTSE and then go the normal way over the pond to the US and then around the world to APAC. So FTSE, as Joe said, has had a pretty decent week. It's the highest levels we've seen since February 2020. So looking pretty good. It is a little bit concerning. We've got decent resistance above. That doesn't come in now till 73.35. So there is plenty of room on the upside, but as we've seen before, it can quite easily turn around quite quickly from these levels. It struggles to sort of maintain any sort of like impetus above the 70, this sort of like 7,200 level, but it's trying its best now. The high yesterday we got to 72.35, which is equal to the high today, and we've seen a sell-off overnight, as Joe said as well. Bearish engulfing candle on the 4-hour chart, and we've had a dip down to 71.85 but reacted higher. So really sort of like watching to see where it goes from here. I think we'll be led by the US more than anything, especially the Dow and the S&P. On the DAX side of things, spiked higher yesterday and managed to make a high of 15,890. That was a very, very quick volatile move, and sort of was quite significant because it broke above the 15,800 level. 15,816 was a previous swing high before that, and we have to go all the way back to forever to get a high like that. So 16,000 is within sight, and probably a good potential target level from a psychological point of view, if anything else. Dow Jones kicking on, and again we've talked about the how sort of sharp this upward move is, but we are seeing the weekly candles struggling a little bit. They are sort of showing signs of topping, but it doesn't seem to stop it. Yesterday we sort of like said, oh, all-time high at 35,250. We've got to change that to 35,000, just under 500. So again, another round psychological level to look at. Today's chart, we've had a bit of a dip lower, as we can see from there. probably actually look at it on a shorter term time frame. 15-minute charts, maybe a bit too short. Half-hour time frame, we can see it sort of like reacting from here. Almost had a bit of a double top formation, but only on a very short-term time frame. We've got supportive trend levels coming up behind us, and the cloud as well. S&P's pretty similar. Again, we highlighted the all-time high a few days ago, and that's been outdone. 44,500 for S&Ps. So again, another quite significant psychological level on the S&Ps, and the trend on the weekly side of things is looking pretty aggressive. But yeah, any sort of like signs of weakening or signs of reversal, and we do have to be aware of it. There's a lot to there's a long way to go if we do get a bit of a turnaround in these. So this is on the 4-hour chart. 44.30 was the previous resistance we've broken above and held and nicely kicked on from there. And as I say, 44.30, 44.50, whichever side level that decides to break, we'd probably go with it. Nasdaq, though, it's a bit of a different story. 15,000 psychological number is a bit of a line in the sand at the moment, and this for me is the one to be a little bit aware of. There's good potential because we know how much Nasdaq has really kicked on and has been far more aggressive in this upward drive, and is showing signs of topping out. Aussie 200, no sign of slowing down there. That's kicking on all-time highs. China 50, we've had a little bit of a reversal overnight, so really looking to, we've got support below at 15,500 and the cloud, but the shooting star candle on this 4-hour chart, and then this couple of decent sell-offs in the last 8 hours could lead to a little further downside in China. Hang Seng, again, not really sort of looking as positive as the Dow or the European indices. And Nikkei formed a bearish outside bar on the 4-hour chart and looks to be heading lower also. So a little bit of a mixed bag overall on the indices. Let's take a little look at commodities. We are going to go for oil first. Oil's had a little bit of a more sustained upward move. This is the daily chart, which we highlighted, this bottom formation where we've seen like now 2 lows around about the 64.90 level, and that the reaction higher after posting a bullish hammer has been very positive over the last 2 days, and again, no real sign of it slowing down. Obviously, we've got the oil inventories out the way from yesterday. That remained, that helped to sort of assist in the positive up move, although we did have a sort of like spike lower first before prices recovered. So little bit of resistance to get past, but I think if we clear the 69.94 to $70 level, then it'll open up the continued bullish move higher. On gold, my favorite at the moment, obviously, and everyone's going to get bored with me saying it, but we have reacted really nicely from this 1677 support level, and although the candle looks bearish and looks quite boldly red, it is forming a bullish hammer. So we've got, you know, a sort of 48 hours for that to play out to see where it closes on. Oh, sorry, this is a monthly chart. Get out of that, Steve. This is the bullish hammer, and if we maintain prices over the next 48 hours, that will be quite a classic rejection of that spike lower, and maybe more potential for the upside. So I'm not writing gold off yet to sort of retest that 1677 level. On the 4-hour chart, we've sort of broken above the reaction level at 1750, which is obviously where we broke from initially. So we are regaining ground above that previous support level. So that is pretty interesting. If we can maintain that, hold on to that over the next sort of couple of candles, over the next sort of 8 to 12 hours, then for me, that's pretty positive. Still obviously potential for a little spike lower, but it could be a really nice rejection of that spike, and the bulls will become charging back, especially if the indices sort of like take a little bit of a hit down to the downside. You never know. Cryptos, Bitcoin, my fave, my buddy. It's really struggling to get above this 50% fib retracement. Again, the 50% fib isn't the really major one that as we look at in technical terms, but 61.8 is. That's around 51,000, which is the measured move target of this triple top formation. So we still got. I'm still positive on that for the upside. Looks like a little bit of consolidation here on the 4-hour chart, but the daily chart doesn't paint the same picture. You've got a bit of a hanging man candle here and a shooting star-like candle here. So I think if we do get back below the 44,000 level and close below there today, we could be in for a bit of a rocky road higher. And obviously, if we look at the 4-hour chart, we've got these two peaks here, which leaves us with a potential for a double top formation. Really has to break that 44,643, and the extended move lower would target a move somewhere around, here we go, live 42,500. Again, that's not a bad level because it was a previous resistance swing high resistance level, and it's been a support level here. So yeah, and the cloud is sitting there waiting to catch it as well. So yeah, just watch that crypto. It's not just a straightforward move up. It could have a little bit of a correction in the meantime before it kicks on higher. That's about it, Joe.
Nice one, Steve. Thank you. Okay, on to FX then. Let's have a look what's going on here. Right, dollar index. So was looking pretty good yesterday, but we ran into some resistance, as Steve and I spoke about yesterday, and made it a point of our gun to the head trades. So we ran into some resistance at 93.19 on the dollar index, which is this previous high that was posted on the 21st of July. And what we've posted there is a bearish outside day, or an engulfing candle. So we've engulfed all of the previous day's session. We made a new high above it, but closed below it. So there we have an outside bearish candle, a reversal candle, and suggests that we may see a corrective move to the downside today. So it's definitely still at that level. That's pretty clear for all to see. Above that level, we've got this all important 93.43 level, which I keep going on about, because if it gets above there, then we complete quite a significant double bottom pattern on the longer term chart. So that party is not going to happen anytime soon. Well, certainly not in the very short term, because that level continues to be rejected at 93.19. And obviously that's having an impact on what we see with Euro USD. That yesterday hit this massive support level at 117.02, and it was defended by the bulls as we expected, because it's a very well watched currency, and when you get these hugely significant support zones, they tend to put up quite a bit of a fight. When we see them down these levels, and it needs to pluck up quite a bit of momentum, and it needs to be quite a propulsive move to break through these levels, which hasn't happened yet. So a bit of a bullish engulfing yesterday. I guess you could just about say that was a bullish outside candle that was formed there. Nothing really to support it on the volume side of things. So I don't think there's any reason to get overly excited if you're a bull, but certainly there is a case for a bit of a bounce in the short term there. But if we do break this 17.04 level, or 1702 level, then we complete, for me, this big head and shoulders top pattern that I've been talking about for what feels like ages on the daily chart. So keeping an eye on that. I mean, arguably, we say we've already done it, because the neckline is an upward trending line, and it broke on a couple of occasions here. But I'd prefer to see this taken out to really confirm that the pattern has completed. Looking at cable. Not really much going on here. It continues to trade sideways. There's not really much to separate the performance of the US dollar and sterling at the moment. So more sideways price action. We did see a bit of bullishness yesterday, but overall conditions are pretty choppy in the short term. So be careful if you're trading that. Euro sterling, that made a break of a significant support level in the last few sessions. As you can see here, it's taken out this previous low from April, and we're still trading below it. We've attempted to get back above that level, but failed so far. Bit of indecision in terms of price action, but while we're below this support level, or what should now be a resistance level, then I think we can expect lower prices on that. What else did I want to have a look at? Aussie, what are they doing? So I was of the opinion this was breaking down from a flag pattern. Looked pretty good a couple of days ago, but it's come bouncing back with the dollar weakness that we've seen. So overall, the momentum looks bearish on that for me, and I think lower prices can be expected. But for now, it looks like we're going to see a little bit of chop. So that's pretty much it on the currency front. There's nothing else that's particularly standing out for me. Some of these New Zealand dollar currencies actually just finish off on have had a spectacular run over the last 6 or 7 sessions. Quite a sharp move to the upside in some of these. As Steve will tell you, you can't see more than 9 green candles in a row. It just doesn't happen. 1, 2, 3, 4, 5, 6, 7. So we've got 7 green candles on this at the minute. But looks to be into a channel resistance level. So maybe this will be the level where it stalls. Certainly on the New Zealand dollar Swiss franc. If we look at New Zealand dollar Japanese yen, not much going on there. Or on the New Zealand dollar US dollar for that fact. So it was only New Zealand dollar Swiss franc that was making that big move to the upside, which may peter out pretty soon. That's it from me.
Nice one, mate.
Now we can talk about Steve's rip-roaring successes in the Gun to the Head challenge.
This sounds interesting.
He's on a hot streak at the moment. So this is 6 trades. You've the last 6 trades, Steve. You made 12.78 R. 5 trades on gold, 1 on oil. And that does take you to a new all-time high on your
Get in there.
Get
in there. Get in.
That's me, lovely, Steve. Jubbly. So Steve's the orange line. Clear breakout there on your performance over the
lovely, mate.
recent sessions. I've been so flat on my performance for what feels like ages. So could really do with a Steve-like streak.
Well, you did assist me yesterday. It was your sort of analysis on the dollar that actually sort of initiated a change in my opinion to sort of like really look for that correction back higher. I'm sort of like in a bit of a quandary today whether I want to sort of like crack on with gold or whether I want to just like sit back and say, no, that was my 6-day winning streak or 5-day winning streak in gold, that I'll just like leave the record there and never touch it again.
Maybe there is that. I had a 1R win on euro dollar, but obviously power's insignificant.
Oh, 1R, okay.
Yeah, just one.
That'll do, donkey, though, wouldn't it? Wouldn't mind that every day.
Well, every day it would be nice, but over the same period that you've had this hot streak, I've made 0.93R. I'm still positive, which is all right, I suppose.
Yeah.
Keeping the wolf from the door. So what you got today, Steve?
You know what? Have you got something that you really fancy? No, okay.
No, I'm gonna go with what did I find a minute ago that I quite liked? Aussie CAD. I was just flicking through some hourly charts and just looking for some patterns that looked quite interesting. So this was a channel that had formed, broken out here with this big impulsive move that we posted yesterday at 1 o'clock. Been sort of tracking it lower but staying above the broken channel line, and in the last hour posted a bit of a decent push to the upside. So let me buy this now. It's currently 92.17. Really tight stop loss actually. I don't want to give it too much room at 92.02. Targeting a move to 92.67. So that's within the average true range of the last 20 periods. So hopefully it's got a reasonable chance. So looking for 3.2R on that today.
Nice one, mate. Good luck with that.
Did that give you enough time to find something?
It did. I'll just sort of like show you my chart in gold, which is a real mess at the moment. But the thing I'm sort of looking at is this resistance where we sort of stalled in the sell-off before we had the huge break lower on Sunday night. For me, that will offer a little bit of resistance up here. Still feels like we've got a little bit of momentum on the upside. So I think we're going to test up in this level. So I don't really want to sell that here. And buying it as well comes with obviously I mean, if anything, I would be buying it, but I'm not going to have that as my gun to head trade. I'd buy it with a very tight stop just below 1748. But the one that I really want to conquer is NASDAQ. And just looking at the sort of like, I suppose, the price action over the last few days been pretty negative. I think if we get a break of 14,972, we'll get some momentum downside going. And this is the 4-hour chart, and it looks like under pressure. So I'm sort of like thinking, let's go with that. 30-minute chart, we're below the cloud as well. And yeah, really sort of like looking for, I mean, I don't know really sort of target wise, but getting short at 15,000, it's a psychological level. So normally I wait for it to break a psychological level before I would sort of like initiate the trade. And on the downside, I suppose the target's around about 30 ticks lower. No, what am I talking about? Sorry, I'm talking about down here. That's about, let's go 90 ticks lower and maybe a 30 tick stop. Is that enough? 15,032. Yeah, that'll be enough for me. I think today it's just sort of like really the stop is around about these highs. It's a short-term intraday trade idea, so has the potential. If I was going for more of an overnight trade idea, I'd like to stop a little bit higher. The target would be lower, but just trying to sort of keep things consistent with the intraday theme. And there's a big gun to my head, so I've got to do it. So selling at 15,002.8. The stop is 30 ticks higher, 15,032.8, and the target is 14,912.8. So that's me today. It's I've gone a bit left field, I suppose, going for an indice, but yeah, just not seeing the sort of like the real value in the gold this morning.
Whatever you say, Steve, we're all behind it. You're the man with the
Don't copy
golden
this
touch
trade.
at the moment.
This isn't investment advice. This is just me with a gun to my head. What would I
People are
do?
jumping on the form. You're the form horse at the minute. Put your money on Steve.
Dear, oh dear.
Okay, 1:30 today. We've got two lots of numbers out that we need to be aware of. So first up, we have US PPI. Headlines expected to be 0.9 from 1%. And then we also have initial jobless claims, which are due out at the same time. And claims are expected to fall from 385,000 to 365,000. So keep an eye on anything US dollar related and US indices. So that could give Steve the nudge that he needs to make it 6 out of 6. We'll see.
Yeah, brilliant.
Cool. That's all from me, Steve. Anything from you to wrap up, or are we all good?
No, it'd be 7 out of 7, won't it? I think I've got 6,
Sorry,
including the oil.
it will be 7 out of 7. You're right.
Right, so can you do 7, 8, 9? We can. I've got 3
Yeah,
more
it'll be
winners
never
coming.
more than 9, though, will it?
Never more than 9.
Then we
No,
need to definitely go against you.
It's
when we get to that
illegal.
level.
I'll get locked up for that.
All right, let's hope we get there, eh?
Yeah.
Cool. All right, mate. Well, have a good day, and same to everybody else. We'll be back tomorrow morning.
Cheers.